Tim Piper, Jindabyne Metals is adding 6% right at the open. First magnetite off underway to China. The significance of this for the stock?
Quite significant. The share price sort of indicating that this morning, as you mentioned, rising. They've shipped their first magnetite concentrate from their Western Australian Carrara project. They are an independent iron ore producer, and that Carrara project is their core asset. They're aiming at 8 million tonnes per annum of magnetite through their stage 1 of the development. That's set to increase hopefully to 16 million tonnes per annum through stage 2. And they've already started shipment of the direct shipping quality hematite back in October in 2012. And if you have a look at Jindabyne Metals, it is a little bit different to a lot of the other iron ore producers on the market, as the majority of the ore they will be producing is actually magnetite, not hematite. And 96% of Australian iron ore which is produced is that higher quality hematite. It's higher quality, it's less processing involved in terms of getting it off onto the shipping. Magnetite, on the other hand, has a lower grade of ore through it. It requires more processing and higher costs involved with it. But along with those higher costs, after the process that it goes through, it does end up with a higher percentage of iron ore content, around 65%. So it does command a slight price premium, helping to offset that higher cost. But it has been a tough 2012 for Jindabyne. As we've seen the iron ore price fall significantly, the stocks that have suffered the most are the smaller miners and the miners that don't have a lot of production on hand, and the miners with high debt levels. So Jindabyne looking through 2013, we've already seen a capital raising recently for stage 2 to ramp up their production. Probably going to be looking at additional capital raisings for the company, probably equity and probably debt as well. So gearing levels expected to rise for the company. When gearing levels do rise, the company does become a lot more sensitive to the iron ore price. We have heard from Fortescue CEO this morning that he's expecting some short-term volatility in the iron ore price.
In the list of key drivers for 2013 that you've been looking at, how high does that stack up in terms of a list for you?
You mean China or Japan?
Japan,
sorry?
Apologies. As I said China, Japan, I meant Japan.
Japan, yeah, certainly. Well, I mean, they're heading into the third quarter of negative economic growth, I think, in a row. They're experiencing significant deflation, but with the change of government and that weakening yen, the Nikkei has outperformed significantly over the past few months. The Nikkei has gained a lot, I think up about 15% in December alone, that market. So it's really benefiting from that lower currency, as mentioned, the possibility of significant further aggressive stimulus in the economy to try and boost some economic growth to come out of there. It will be the exporters which will probably be outperformers for the Japanese market in 2013, probably along with financials as well. Financials in the Japanese market will probably outperform along with those exporters, as lending growth will probably expand as this stimulus comes through and the economy improves, and investors become a little bit more risk on. They'll move into stocks like the financials and exporters. But for the Australian market, certainly leverage towards Japan in our economy as well. So a better Japan will be a positive for the Australian market as well.